Test, test, test. Hello, 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 hello. Hi all and welcome to another edition of Midday Market Review, live trading, key trading levels and trading setups for popular markets. My name is Phil and I'll be your presenter today. Let me just see that this is all streaming okay. I think we are up and running as we should. I'll just go through this very quickly. Hello, 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 hello. Brilliant. Excellent. Okay, so if you're looking for a community, check out TraderCast. If you're looking for the education, check out mytradingskills.com. mytradingskills.com. Most of the stuff that I'll be doing here today would be based on some courses that we are delivering there, and some of them are free, so check them out. This is a little bit about myself. Over the past 10 years, I had the privilege of speaking in front of various different industry events. I also taught many people how to trade. This brings me to a disclaimer, since I'll be showing you some live trades or talking about some live trades. This is not the advice, it's basically my experience and opinion only, and this is what I firmly believe a novice trader should be able to do. This is basically a practical application of what we teach in our courses: price action, real time, no complicated indicators, no complicated strategies, very simple trend following approach for popular markets. And this brings me to open trades, and I have no open trades at the moment. I'm completely flat. The markets are volatile. I think I've missed an entry, but I'll talk to you about that a little bit later. So currently there is no open trades. This brings me to the markets. We are seeing US equities are pushing lower. This is Nasdaq, this is Dow Jones, and this is S&P. We are seeing euro dollar pushing lower, cable pushing lower, dollar yen going sideways, and gold is bouncing off the lows, and we also have crude oil at 121.50. So these are the few markets that we could possibly talk
the National
about.
Economic Council Director Dees is set to be speaking soon on CNBC, reacting to the CPI report today.
The reasons why all of this is happening, so let me just show you a little bit about the news feeds. US consumer price index came in about 35 minutes ago as 8.6. So basically this is the indication of inflation levels in US, 8.6%. The estimates were for 8.3. So even with Federal Reserve hiking rates, that didn't do anything to slow down the overheating economy in the sense of pricing going higher. So this leads us to believe that Federal Reserve will carry on hiking rates. That's normally seen as good for the US dollar, for the currency, but bad for equity markets. And you can see the same reaction in equities here. You can also see the same reaction in euro dollar, sterling dollar. So basically currencies which are traded against the US dollar. Apart from that, we have very little today. We have Christine Lagarde, European Central Bank Lagarde. She is due to speak in about 9 minutes or so. This is pre-recorded speech. And then we also have University of Michigan consumer sentiment in about 53 minutes as well. So that these two things are the main things which will drive the market volatility today. So I'm gonna sneeze. Apologies, that was a big sneeze. Now hopefully I caught it in time. Yes, we are back on. Brilliant. So from need to know market risk, we have US consumer price index went up 1, DXY strengthened, S&P weakened, US interest rate futures price in about 200 215 basis points in cumulative Fed.
So you're also getting some reactionary comments now from BMO following the CPI reports. This is BMO again saying that a little respite from 4-decade high inflation until energy and food costs simmer down and excess demand pressures abate in response to tighter monetary policy. It's BMO noting that the Fed might still raise policy rates just 50 basis points next week, but it could easily ratchet up the pace beyond then if inflation keeps surprising to the high side.
Thank you, thank you, thank you. Thank you, thank you, thank you. Okay, cool. Thanks, Robert. Sorry. Yeah, I was just saying, U.S. equity briefing, basically it says U.S. stocks futures sunk and Treasury yields spiked higher after data showed an unexpected acceleration in price gains that could force the Federal Reserve to become more restrictive in its battle against inflation. European stocks slid. Futures on the S&P 500 slid more than 1%. The two-year Treasury yield topped 2.9% and the US dollar strengthened, which we can see here as well in Euro-dollar cable as well. Consumer prices jumped 8.6%, surging past expectations. The Fed has signaled it will likely raise rates by 50 basis points at its meeting next week and potentially again in July. The hot inflation reading will likely fuel bets that the central bank won't be able to slow the pace of hikes to 25 basis points when it convenes in September. So that's basically what it is. That's why we are seeing these big pullbacks in US equities. But I want to see if it settles and if I can get an entry of some sort. But I did not front run the news. I did not trade the news. Okay. Thank you, Robert. Thank you. So hopefully this is all streaming okay. can see it. It's all good. Raj, I had DAX and Nasdaq sell stop, got triggered with massive slippage, but still got profit due to deeper move. Okay, well done. Well done. Brave move. Well done. Okay, so where am I now? What am I doing at the moment? So let me see. Gold. I was looking at that gold around 1850, but it didn't work out. It really didn't work out. So okay. So let's start with S&P quickly, and then we can go and check out. Oh, sorry, I was just checking out any of the setups here to see if anything was of interest. If you remember, I was looking at S&P. We talked about this yesterday.
Piece here from Washington Post to report that Pelosi is fearing China competition bill loophole.
As a flag formation, with the retracement to this important support towards 4070, 4060 area, which is this shaded area here. And we were here yesterday, and this was yesterday's drawing. So basically a pullback and a rally. So that was the premise for yesterday, and instead what we got a loss of support and then another leg lower. So now this is coming to a full 61.8 fib from these lows to these highs, and what I'll do is I'll be bold enough to put this as a significant support level.
Just looking closer at that Washington Post piece there against sources reporting that Pelosi is fearing tech giants will exploit a wrinkle in the China competition bill. They note that for weeks now, consumer advocates have sounded the alarm that trade language in the massive China competition bill is currently under negotiation on Capitol Hill and could be exploited by tech giants to target regulations overseas. That includes Europe's sweeping new digital rules.
So two ways to play this. First one is if we see an oversold rally from here into this resistance for possibly another leg lower. So oversold rally, short sell at 40.20 with a stop at 40.50, 40.60 with a take profit down here towards these lows at 38.50. The other scenario would be a continuous selling pressure. Maybe even a little a retest like this for another leg lower. That's also a possibility. But this does look quite bearish now. It really does look bearish, and I'm going to leave this running as it is. Leave it running as it is. From the shorter term point of view, 1 hourly, this looks quite bearish. 15-minute bearish. You can see quite a few people decided to buy the dip or at least close their shorts, and that's basically created this green candle here. When the US markets open, this can all change. We could see a big leg lower, more selling pressure, or we could see a gap fill basically, or partial gap fill, where we closed yesterday, where we are opening today. So it could be an oversold rally at the open. I might participate in that. I'll see. At the moment I have nothing open. The other thing that could be of interest, let me just see where we are opening today, so it could be an oversold rally. Okay, the other thing that could be of interest is gold. So gold looks bearish here as well. This is a daily chart for gold. This looks like a consolidation, and I was a buyer at 1850 with a potential take profit at 1870, but that didn't happen. Instead we saw retest of 1840, 1850, 1840 again, and finally we saw this loss. So now really these lows represent some level of interest from the support point of view. So this area here, these previous lows are now resistance. So if we do see an oversold bounce back into that area, then potentially we could see another leg lower from there. So 1840, only the breakout above 1840 and a retest of that could then change this into a falling wedge, and then that could spike towards 1870 again. So currently I have nothing open in gold. That's a 4 hourly, this is 1 hourly, and this is a 15-minute. So massive rally higher when the equities sold off, gold rallied, and now we're seeing this. So probably a very difficult day to trade today, at least from the swing point of view. I think we could either see a continuation of the larger trend in indices, i.e., a bearish sell-off, or we could see a short-term intraday volatility, oversold bounce backs, which then could be sold into again. That's where we are with gold. Very quickly, I want to talk to you about crude oil. Crude oil appears to be very, very bullish. So what we have here is a nicely uptrending market here. I've drawn this trend line, and I was looking for a pullback towards 118.70, possibly even 116.80, 116. So I was looking for a gradual pullback lower to this support, and then a rally from there higher. It is possible that we could see maybe even a greater pullback towards here, 115.60, 115.70. So that's possible as well. Something like this, and then a rally from there. Either way, crude oil appears to be very bullish. You can see it on your petrol stations. You can see the price of fuel for the cars, and you can also see it here in the price of crude oil as well. This is WTI, which is US traded crude. You might have a slightly different price. This price is currently showing 120.90. So let me just tell you where is is my price? Commodities, crude. Ah, it's here. Here we go. It's added already. So the crude price that I'm getting here on my brokers is 118.90. So slightly lower than this one. Slightly lower than this one here. I would likely be a buyer at the pullback. I have nothing open with crude at the moment. It's Friday. US consumer price rise more than expected, lies Quark Treasury and US Bank of Italy. No, nothing. Really nothing that okay, we've covered S&P, we've covered gold, we've covered crude oil. Let's see if there's anything else. If you need something else covered, let me know. Feel free, I'll be more than happy to do so. We have about 5 minutes to US markets opening. Very quickly, we saw fairly decent volatility in FX pairs. So this is euro dollar. There was that energy build up. European Central Bank, we had interest rate decision yesterday. Nothing really happened there. We saw this spike and reversal, and then a continuation to the downside, which is even more significant now because of that a US consumer price index reading, which is prompting traders to believe that Federal Reserve will carry on with the rate hikes, quite aggressive rate hikes by 50 basis points, which is bullish for the US dollar. From the trend point of view, we have a clearly defined downtrend, high, lower high, lower high. So there is a trend. This is the resistance area at the moment. So an oversold bounce back into this area here would likely trigger another short sell, so 106.50 for a push lower. Most of the people who are looking to do that would have the stops at 107, 107.50, so 50 or 100 point stop. So this is major resistance now. This is a major resistance now for euro dollar. The other alternative is if we just see continuous pressure to the downside, maybe a loss of these lows, so something like this. So loss of these lows at 105, 104.90, and then that could trigger another leg lower, so something like this. Loss, retest, and then another leg lower. So both scenarios are bearish. Both scenarios are bearish for euro dollar. Test. Okay. I can see that. To see who is watching. Yeah, that's on. So we're 1 minute ahead of US Open. 1 minute ahead of US Open. Chocolate, you can't go wrong with that. Lovely coffee with some chocolate topping. Okay, is there anything else of interest, guys? Here we go, we are at the Open. For a scalp, come on. C5. Just looking to see if I can take a few points out of a opening trade. I'm looking at S&P. Looking at this. It's a good level. It really is a good level, this area here. But will it hold? That's a big question. So let's see if we get at least a small candle of some sort showing us.
So losses at the open on Wall Street. S&P 500 down 1.6%. Seeing further moves in the bond markets as well. US 2-year yield extending its rally, now 15 basis points to 2.96%. US 10-year crossing above 3.1% in recent trade as well.
So this looks like it could go lower now. So you can see this nice engulfing oversold bounce back. This is the first few minutes of the trading. This is a significant low. So it looks like it could dip lower now. Sorry, I just realized I was on mute again. So we have equities lower, gold lower, oil lower, euro dollar lower, cable lower. So everything lower apart from US dollar. What I'm going to do is I'm going to probably have a limit order with crude oil for now.
Comment from the ECB, Simkus says they won't come back to past policy rates, should implement orderly and gradual policy, must avoid high price expectations becoming entrenched. It's comments from the ECB, Simkus.
No, there is no trigger just yet. So even in a 1 minute, time frame, what I would expect is I would expect at least something like that. At least a loss retest. And then at least that's tradable. But so far it looks like it's a straight down. Okay, we'll get one. We'll get one.
The US 5-year, 30-year Treasury yield curve reinverts for the first time since the start of May.
Oversold bounce back, maybe. Here we go, S&P again. So these moves are quite big. They're like 10-point moves for S&P. That's quite a nice, decent size chunk. Let's see if we get one of those. Just realized the time as well, guys. I'll be stopping this broadcast fairly soon. Okay, is there anything else that you need covered? Let me know. I think we didn't cover cable, so let me just do that as well quickly, and then we can finish with that while I'm waiting for this to settle. Okay, so here we go, cable. This looks bearish. 2480 was a big level. Now this area here could offer some level of support, and then we are seeing this. So if we see an oversold bounce like this, then that could possibly open the way for another leg lower. So previous support, newly found resistance, off it goes. All the way down towards 123.50, possibly even 122 to the downside. That's where we are with cable. Euro dollar. Again, very little here. Dollar yen moving higher. Guys, I'm really sorry, but today is not really flowing. It's not really flowing for me today. Okay, nothing really to report today apart from those levels that I've given. I'm keeping an eye on 39.47 for S&P as a major resistance. Major resistance on euro dollar is 106.50. Resistance on cable sterling dollar is 125, 124.80 to be more precise. Gold 1840 is the huge level, and for crude oil 118 would be of interest, possibly even down here towards 115 to the downside. So that's where we are with the market at the moment, but really very little very little to do at the moment, unless we get some levels broken, and then we can engage with that. Sorry, me. That's what I'm talking about. I can get engaged with it. Okay, lovely talking to you all. Stay safe, happy trading, and I'll speak to you all on Monday. Bye for now. Thanks.